Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market update for Monday, the 2nd of July. Can you believe we're now into Q3? The first half of the year was somewhat okay, but the last quarter was not so kind to stocks. Stocks were actually down last quarter. So as we start Q3, the question is, are we going to go into a global slowdown? Is that in the cards? Or are things going to get better? I think the surprise announcement out of the European Summit on Friday was really a shock to most market participants. Nobody expected anything. I think that, combined with the fact that it was the end of the week, the end of the month, and the end of the quarter, all created a very short squeeze in the marketplace, which had pushed the markets up very dramatically. One of the best one-day gains we've seen in quite some time in the equity markets. So the question we have is this going to continue? I am not so sure. I think what we're looking at right now is you're at a 61.8% retracement. Let's go to the charts and let's just explain that to you. So what we're looking at is a larger picture of the S&P 500, and as you can see, let me just get put the pen on here. That's good. And as you can see, this sort of market rolled over here. And so we measured from this point here to this point here, and you can see the various points we came in: 23.6, 38.2, 50%, and 61.8. Now 61.8 was right here and really back up here. So the question is, this is going to be a potential double top and a pivot point to go down. It's still too early to tell, but the reality is, if you look at the bigger picture, this is still not a turnaround in this market. We still have a longer-term monthly trade triangle, which is pointing the way down, and you have a mixed bag on the weeklies and the dailies. So you've got this plus 60, and we know what that means. That basically means it's a trading range right now in this market. And I think that's the key thing to remember. We're not in a runaway bull market by any means. This big move we saw here, right here, on Friday, was enough to push the market out, the shorts out of the market, and the question is it going to have any momentum? I think we're going to need a few more days left to turn this market back down, but it needs more. It's not going to turn around in just one day. This is too big a move, too big a challenge. But the key thing is, we are in an overbought condition on the Williams percent R. The fact that we're in a trading range, which is right here, 60, and the fact that we're overbought would lead to me to believe this market's going to come under pressure and push this market back down, particularly as the longer-term trend is negative for this market. We're also going to be looking at two stocks that gave buy signals today that look good, and also one stock that gave a sell signal that also looks like a great short. So let's clear the screen, go to our next market, and I'm not going to spend any time on the Dow or the NASDAQ. We're just going to skip through those and go right to the silver market. And the silver market really isn't doing much at all. It's still a minus 75, and I think that's the thing to look at. So this market's still, just visually you can see this. One of the best ways to tell if a market's going up and down is just visually looking. Is the line going this way? Yes, it is. So the longer term trend is definitely negative, as is the weekly trend right here. So generally speaking, a minus 75 means the trend is still down, and we're still looking for this market to go lower. The other thing is you're in a plus situation in terms of getting overbought, and I think we need to watch that very carefully, because I think we'll see this market once again swing back down. So let's clear the screen, go to our next market, which is going to be gold. And gold is going to really kind of show us nothing, very much similar to the silver. And I think the thing to look at right here is, look at this market. This is the kind of, we're just trapped between this level here and this level on the downside. Really, it's kind of a broad trading range. You can see how it's just sort of going up and down. Let me change the color of this pen, if I can, to a color that we can see more readily. So let's. So again, we've sort of got this up and down look. Really, not too much. We're in an overbought situation. We do have the weekly and the monthly pointing down, plus 55. Again, we're in a trading range, much like silver and the equity markets. So I think this is going to be a week where we're sort of beginning to sort things out. It's a shortened week. There's no trading on Wednesday, which is the 4th, and I think that's going to be really a key thing in this market. Very thinly traded. It's a question of whether traders are going to go away on their vacation to the beach, or they're going to stay at their desks and trade. But the volume's always been light, and there's no reason to get super, super excited on this market at the moment. So I would say, let's see how this plays out, and let's go to our next market. And the next market we're going to be looking at is going to be, if we can get this to move forward, is going to be copper. Copper had a big move, as we said last week, short covering. It looks as though it's sort of beginning to base out, but the reality is it hasn't based out yet. And this is the key thing that we're looking at here, and that is you still have this plus 60. It's a trading range. And really, it's hard to believe we're having all these markets in trading ranges, but trading ranges tend to be a precursor of moves, changes, and trends. So potentially we could be basing out here to push this market higher. It's still too early to tell. I want to wait until we see some stronger signals, especially in our monthly one, which is a very, very good indicator for copper. So let's be patient. Again, we're overbought here, so something to be a little bit cautious of. With a plus 60 trading range, overbought means the next move could potentially be on the downside and testing the support. So let's clear the screen, go to our next market, and the next market we're going to be looking at is going to be crude oil. Crude oil, as you well know, had a very big move last Friday, much like all the other markets. It's like a big short covering rally. But unlike the other markets who are in a trading range, crude oil actually is still in a negative trend. And I think that's the key thing to look at in this market. So here you are, you have the two indicators here, two key indicators, the weekly and the monthly, minus 85, which means it's a strong downtrend. And I think that's the key thing to remember right now. Hang on. So I think that's the key thing to remember. And just put that in, strong downtrend. So I think you sort of trapped between these levels right here and these levels right here. As we said, every time we've seen crude oil go below $80, it's been a buying opportunity. This may well be a buying opportunity, but it's still too early to tell. We are in an overbought condition, which we got last week because of the strong upward move, but I don't think it's going to reverse and suddenly keep going higher. So we'll see how that plays out, especially if we're seeing a slowing in the economy, both here in the U.S. and also in China and in Europe. So let's go to our next market. Let's clear the screen first of all and go to our next market. Next market we're going to be looking at is going to be, just one moment, is going to be the euro. Now the euro had the same plan. This was the action we saw on Friday, a big move up. The reality is the euro is not going to go anywhere for the moment. This is a very heavily anticipated trade. A lot of people were short this market. My guess is they basically got blown out of the market this day here or this day here because it's a short covering rally. The 127 level, which is right here, this is like so far it's like a brick wall for this market, and it has stopped every rally so far, and Friday was no exception. We did not go over the 127 level. I think we got to 126.97 or something like that, but it did not go over the 127 level. So I think for the moment, having been overbought, we have a plus 70 here, so a little bit mixed bag. The weekly is up, obviously, but the long-term monthly, which is short from 139.69, which is way off the chart, way back here somewhere, is still intact. And I think providing that level stays there, I think we'll see this market sort of move around and again test this 124 level. 124 to me is a very key level. If we see a break below that, the 124 area, sometime in the next few weeks, I think we'll be starting to accelerate. We still have to see details coming out of Europe, and they're still right now very, very foggy and nebulous. It hasn't been decided exactly what's going to happen there. So let's go to our next market. And the next market we're going to be looking at is the CRB, the Reuters-Jefferies CRB Index. Good indication for inflation. And, of course, it looks as though we're back into a 60 mode there, which is a trading range, which we've talked about before. We are overbought. So I would suspect this market is going to just jog around here for a while. And maybe we're seeing the beginning of inflation. It's still too early to tell because we don't have our monthly indicator, but certainly commodity prices have been going up, and I think that's something to be very, very wary of. Also, we can just put our indicator on here in terms of, let me just take this off, but we can also put a trend line in here, which is very easy to do with MarketClub. Just click here, get the little yellow box in the back, and you can go from here, scope this out, and I think it's fair to say if we see this market broken over this trend line, here we have 1 point, 2 points, 3 points. I like to have 3 points touching. That gives you a stronger trend line. But this area that comes in at 290 is very, very important, especially this coming week. If we don't break over that, I have to assume this is a correction in a bear market. And we still have an unfulfilled target zone of 250 on the downside in this market. If we're right about this trend and also the fact that we may be going into a slowing phase in the economies worldwide, a global slowdown, then I think there's a good chance we could see this market hit. So let's clear the screen and go to some of the stocks we picked out today in our portfolio. And they had some interesting ones because the reality is we had signals on this stock today. This is Armour Residential, this is REIT, a REIT. And you can see the move, boom, big move up. The signal was at 710. It's currently at 720. It's not going to be a super big mover winner, but it looks like it's on its way. If you scope this out just a little bit more, you can see this market's been pretty solid here, just on a close-only basis. Pretty solid build in the base. I think if we can get it over the close over the 720 level, I think some of the closes we've had here like 720, 717. I think a nice close over 720 would be a nice signal for this market wants to go higher. So let's go to our next market. Next market we're looking at is Suntrust Banks. Again, this had a signal today coming in at 24.83. It's currently trading at 24.66, so you can actually buy it a little bit lower. But that looks good to us also. Nice base, a nice move it's making here. And certainly I think we can see a close over the 24.80 level. Let's round that up to call it 25. But 24.80 would be a very, very good signal for this market that it wants to go higher. So lastly, we're going to look at a bear market. A signal that came in on this Liquidity Service. Not sure what they do, but we had a signal at 42.68. It's currently trading at 39.74. This signal came in today, by the way. You can see just right here, let me just take the trend line off right there, but you can see it came in at July 2nd at 42.68. Now we also had some other signals that came in. I'll show you how we get those signals. And you simply go to the triangles. These are the trade triangles. Equity, volume greater than, I like to see volume greater than 1 million or 2 million. I'll go to 2 million right here. We want to look at monthly trade triangles, and we want to search today only, not since yesterday, but today. So we scan them, and I know we had a few. Well, I've got a few more coming in today, and you can just simply click here, and this is going to sort them for you. And there we go. So it shows you all the winnings, the buys, I should say, not the winners, but the buys, and all the sells that came in today. So there's Liquidity Services. It basically, the signal came in at 10:03 this morning. So obviously that was a couple of hours ago, 3 hours ago. But nonetheless, the signals click in. You can see this is at 12:16. This is Eastern Standard Time. That's about less than an hour ago. That's a very low, inexpensive stock. If we start in from here, 10:25. 999 1236. That's Visa. Interesting. Had a buy signal on Visa today, and Suntrust Banks, as I say, came in 947 early this morning. But that's the latest one. That's Visa. So let's just take a quick look at Visa. It wasn't on the cards anyway, but we'll take a quick look at it and then wrap up the show. So these trade triangles come in. It's a new high on Visa. It looks obviously very, very good, and it looks like it wants to go higher. So looks like a good play on the upside. 125.35 was the signal. It's currently trading at 125.39. A little bit of a lead on that, but nonetheless, it looks like it wants to go higher. But one of the key things you may want to consider, especially now that we're in Q3, is our Market Club's personal one-on-one Market Club coaching. Is it right for you? Well, the call is free and the consultation is free, so what are you waiting for? So give us a call, 877-219-1482, and see how we can help you improve your trading for the rest of the year. Hey, I'm Adam Hewison. Thanks for stopping by. I'll see you tomorrow right here. So have a great trading day.